Three things to watch this week in the stock market. That is what we're going to be talking about in this video today, guys. And remember, these things might not be things that are directly stock market related, but they're going to be things going on in the world that can affect the markets. Hope you guys enjoy this video and these videos I've been doing on stock market news and updates and different stocks. If you do like it, don't forget to hit that thumbs up button. That really does help me out in a huge way. It really helps satisfy that YouTube algorithm we're working on here, and it really helps push this video out to more people and more new subscribers, which if you haven't done yet, make sure you subscribe to the channel as well if you want to see more videos on me doing weekly stock market updates, stock market news, stock breakdowns, and all things stock market related. So the first thing we'll be talking about here that can affect the markets are virus cases. The US just reported 83,000 new virus cases on both Friday and Saturday. That blows away the old record of 77,300 cases that was seen in mid-July. Amid the growing trend in cases, health experts are warning the United States could be in for a difficult winter. The increase in cases in several states are leading to more hospitalizations and will ultimately lead to more deaths, White House virus advisor Dr. Anthony Fauci said Friday. So let's look at this chart of daily United States virus cases. In the peak where everything was shut down, you couldn't go out to eat, you couldn't go see your friends, you couldn't even go to the grocery store without being stressed out and concerned. Daily cases were around 40,000, so we're more than doubling those case amounts right now. Then in the overall peak, right before this one in late July, you saw about 77,000 cases we just talked about. Then once we got to like mid-September, September area, cases began to drop a little bit. Now they're spiking again and they're back to record highs. You're also starting to see countries like Europe or other countries overseas having a hard time. Some countries are going back into shutdown mode and a lot are placing further restrictions like closing restaurants and bars. And it just doesn't really seem like things are getting better at this point. And here's the thing, I don't think cases are necessarily spiking. I feel like they were around this level the whole time. People just weren't getting tested. I know a lot of people that are trying to get tested. I know a couple that are trying to get tested right now, and test sites were closed down. Now they're opening back up again because you're seeing the rising number of cases, but a lot of test sites were closed down, and I just feel like it was hard for people to get tested, and then they didn't have supplies to get tested. There were a lot of reasons these cases were dropping behind the scenes. And just to prove that point, testing is actually up 13% from October 1st, so obviously there's going to be an increase in cases when more people get tested. While virus testing is nearly up 13% from October 1st, new cases have risen at a much faster rate. The 7-day average of new infections is up 51% over the same period, according to the Johns Hopkins data. The increase in cases in several states are leading to more hospitalizations and will ultimately lead to more deaths. White House virus advisor Dr. Anthony Fauci told MSNBC's Chuck Todd on Friday. 13 states reached record high hospitalizations on Friday based on a weekly average. Many of them are in the West and Midwest, including Iowa, Montana, North Dakota, Nebraska, Ohio, Oklahoma, South Dakota, Utah, Wisconsin, and Wyoming, according to a CNBC analyst of COVID tracking project data. Now keep in mind, currently the death rate is around 3%, under 3%. I believe it's 2.5%. When everything was shut down, the death rate was closer to, I believe, somewhere between 5 and 7%. So you can currently make an argument that it's not as bad because the death rate is not as high. You can also make the argument that it's not as bad because a lot of people that are passing away because of underlying conditions. And it's easy to not worry about this and not think too much about it because at the end of the day, people just want this to go away and they want things to go back to normal. I remember when this first started and Rudy Gobert and Donovan Mitchell tested positive, you're thinking things like, are they gonna live? Now you see a guy in the NFL, you see Cam Newton, you see Stephon Gilmore test positive, you're just saying like, can he play next week? Like people just want this to go and people want to go back to normal and they just want to completely forget about it. The bottom line of society is just portraying this differently than they would 6 months ago, and things are different now. And if you look at this chart, deaths have actually remained relatively flat throughout this spike in cases, but I'm not sure if that's going to remain as the winter gets closer and closer. I feel like it's being played down a lot right now by society. And as hospitalizations begin to increase as well, I think it's possible we're going to see more and more deaths. Like you might not see that death rate of 5 to 7% again. I don't know if it'll get that high, especially with this higher number of cases. But look at this, for example, say you put 10% into your retirement account and you make $100,000 a year. So you're investing $10,000 every year. And let's say someone else puts 8% into their retirement account, but they're making $500,000 a year. So they're investing $40,000 a year. Even though that person is only investing 8%, they're still investing more than that person who makes $100,000 a year. That was a little bit of a weird analogy, but you get my point here. As cases will go up, deaths will eventually go up with it, as will hospitalizations, most likely in my opinion. And this rise in cases could absolutely affect the markets if they continue to rise, as well as death rates and as hospitalizations as well. You might be sitting there thinking, well, my portfolio is doing great right now. I'm killing it. My portfolio is way up. Stocks only go up. the markets are a little bit distracted right now with other things. First off, we're in the middle of a huge earnings month, okay? Secondly, we're about a week away from an election. And thirdly, there's still the stimulus package negotiations that are going on, which is driving a lot of optimism in the markets right now. I don't know if we'll see that low of 18.5 that we saw in the Dow in March, April area, but I definitely think we could see a little bit of a decline, whether that's from the virus or the election. And that brings us to the second thing we're going to talk about in this video, and that is stimulus package negotiations and where they currently stand. U.S. House Speaker Nancy Pelosi and the White House traded blame for the latest stall in negotiations on a new virus stimulus as pessimism built at the Capitol that anything could be accomplished before Election Day. Right off the back, immediately right off the back, what does that tell you? Things are not going well because the blame game is being played out here. And the fact that this is public news and the media is covering it, I find that means it's very unlikely that a deal is going to get done before the election next week. We could do that before the election if the president wants to, Pelosi said Friday in an interview on MSNBC. Treasury Secretary Steven Mnuchin, now remember, he's a very big player here because he's part of the negotiating team for the Senate. Pelosi's primary negotiating partner said there's been significant progress, but blamed the California Democrat for holding up an agreement by not compromising on her party's priorities. We've offered compromises, Mnuchin told reporters at the White House. The speaker on a number of issues is still dug in. If she wants to compromise, there will be a deal. And after reading this, I just find it even more unlikely that there's going to be a deal before the election. Do I think a deal will get done eventually? Yes, I do. I do believe there is going to be a second relief package, but I also think that there is a lot of stress about getting this done before the election, and I just don't think that's very feasible right now. However, like I just said, once the election is said and done, I do think there will be a second relief package in some form. And although they have made a lot of progress and they have agreed on a lot of things, there's still a lot of things they don't agree on, apparently, by that article. So I don't think it's really realistic for a deal to be done before the election. However, after the election, I do think changes will be made, compromises will be made, and a deal will be done. But a lot of optimism that the markets are seeing, a lot of the increases that you've seen in the market lately are centered around this stimulus package negotiation. So what happens when these negotiations are called off, which I think is only a matter of time at this point? We might see a slight decline in the market, but I do think the market's going to be more focused on the election at this point. And as for the third thing we're going to talk about to watch in the stock market this week, and this is pretty obvious, but it's earnings. Like I said earlier, we're in the middle of a huge earnings month, and actually tech more specifically has been part of this stock market rally we've seen over the last 6 months or so. Apple, Facebook, Google, parent Alphabet, and Spotlight as more than a third of S&P 500 members will report earnings in the final week of October. Actually, this week there's 186 companies in total that are reporting earnings. So far, however, S&P 500 blended earnings, including actual results and forecasts, show a decline of 16.5% in the third quarter, with 27% of companies reporting. If that level of deterioration in earnings eventuates, it would present the second steepest year-over-year earnings decline since the second quarter of 2009, when it declined by 26.9%. So how is it going to affect the markets if these companies, more specifically these big tech companies, hit great earnings or they miss completely? To be honest, I don't think these earnings are going to affect the markets dramatically either way. I don't see if all these tech companies and these total of 186 companies hit on earnings, you're going to see a 5,000 point increase in the Dow. And if they completely miss, I don't see a 3,000 points decrease either. Mainly because I just feel like right now the markets are focused on other things like the election. They're more focused around how policies, taxes, and all things of those nature are going to change over the next couple of years. But keep in mind, do your own research, develop your opinions, do your own due diligence, because I'm just a random guy talking to myself in my living room with no one else around. But in saying that, I would not expect a huge rally or a huge decline in the markets this upcoming week, because I do feel like they are more focused on the elections right now. And saying that, guys, that's going to be it for this video. Thank you so much for watching. Remember to like and subscribe as always. Those two things really help me out in a big way. Let me know in the comments what you are watching in the stock market this week, and I will see you guys in the next video.